Good morning, everybody. This is Dennis Wilburn with the Active Trend Traders. It is Friday, February 13th, and boy, we're getting to see some exciting times in the market. And we've got David Grandy joining us from All About Trends. David, how are you doing?
I'm doing well.
So, Dave, right now we had a little chat before we got started with this. So far this year in the market, I've been basically playing small ball because the market's been kind of flaky. It's been a challenging market to trade because of the range. Yes, there's been profitable trade opportunities. However, they are very short-lived. And currently, I am open right now just in one position, and that's NOAA. With the anticipation of a potential earnings run, and we got stopped out of one position this morning, which was AMBA. We'd already had a nice profit in AMBA earlier in the year, and but AMBA fell from the sky like a bird that had been shot. And so, how are you guys doing, Dave?
We're doing good. We locked in a bunch of gains earlier this week, and so we're just kind of almost all cash, just waiting now for the next pullback.
Yeah.
That's what we do. We buy the dips and we sell the rips, and we just ripped.
Yeah, we did. And so we're just standing there and, standing by to stand by. And so I want to remind everybody that everything we do present on the How to Make Money Trading Stocks show is for trading purposes only, and the trader should always paper trade any new method prior to the risk of their own personal capital. Well, David, there we were. That's you?
Yes, we were.
That's you here, and that's me over here. And just before we presented at the World Money Show in Orlando, which was a really good time. It was nice meeting a whole bunch of new people. And so, Dave, how do you think the presentation went?
I enjoyed it. And I think other people did too. We got a lot of good feedback and good results, so I was happy. How about you?
Yeah, I was too. It was really awesome, and what's really cool is the organizers invited us to go and do this one coming up in October, which is the Traders Expo. And so if your schedule's clear, I know my schedule's clear, and I just have to basically schedule that first, and I can schedule my yearly trip to my homeland. So are you free for October?
I'm there.
Okay.
I'm going.
So anyway, so we'll be letting people know more about that, and I'll stop showing these World Money Show slides and regenerate them back in the August time frame or something like that. So let's get on to getting on. We just want to remind everybody that Dave and I do, as you know, love to talk about stocks. We have two great presentations, and we can adapt to any group, whether you're an IBD meetup group or just a regular meetup group or an investors group or a trading group. We've got two really great ones. One, the art of trend trading, and secondly, the how to benefit from alternative entries that we can do either at your group if you were in the local Bay Area, or we can also tap into your group via webinar, which is always a lot of fun, because if we tap in via webinar, we record that, and that way you get you get to basically review that at your leisure. So here is my take on the market right now. Is basically the market this week has shown a little bit of evidence that it may be righting the ship, but it's not out of the woods yet. The S&P this morning popped up and drove all the way up to its all-time highs that it hit last year. And then, hey, Deb, how you doing? Hit its all-time highs again, and that is where it was as of when I put this slide together. Secondly, the NASDAQ 100 is, it's been demonstrating a bunch of breakaways, gaps. I mean, just bam, 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 like 3 days in a row. But the question that I have is, okay, are those breakaway gaps or are they exhaustion gaps? Time will tell. But NASDAQ was able to break above its high from last year, And believe it or not, David, this is really crazy, but less than 11% away is the all-time high for the NASDAQ, which was set back in March of 2000. So that's kind of interesting, isn't it?
Yeah, it is. Yeah, so it's going to be exciting here.
And so then Russell basically is showing a similar type of pattern to the S&P. It has driven back up to resistance of last year's highs. And then outside influences that may be affecting the market this week is one, it is a shortened trading week, so Monday is off. Those of you who sell options for premium, you will have a 3-day weekend to let some of the theta decay away. And but what are we looking at? We're still got about 2 weeks of the heart of the earnings season to go. And as we continue to see, those of you who like Tesla and like Baidu, a slight disappointment, they got whacked. And the flip side of that is, a positive earning, expectations, and bam, things launched. Terrorism, it continues to be a concern throughout the world. It seems like it is continuing to heighten or raise its ugly head. And at this point, the market really hasn't reacted to any of these terroristic acts. And so we'll see, and then we'll see where that goes. And then one of the other things that I think is an outside influence that really hasn't totally come to bear at this point is just a lack of world leadership. I mean, I salute the King of Jordan, who basically has been, jumped in his airplane, has been flying some of his own attacks on ISIS to try to destroy that threat. But, it almost seems like the U.S. has relegated its world leadership role over to other people. Now, of course, that is, don't get upset with me. Don't send me nasty emails. That is just my view of what I see going on. And so will that come back and bite us in the rear? Who knows? One of the charts that I love to watch is, of course, the percentage of stocks above their 20-day moving average on the NYSE. Earlier in first part of February, we came back and kind of tried to retest this zone down here at the 30 level, and we've bounced from that. We had gotten into a smaller position over here on TNA and got a nice trade, pop-up trade on that. And then we had this retest intraday, popped up, didn't get down into our retest zone. But now it appears as if the market may be getting some traction to take this indicator back up into the 75 to 80 zone. Why is that important? Well, one of the things that's important is the last few times it has gotten up close to that level, the market has either gone sideways, continued to go sideways, or actually dipped and went back into a slight correction. This is just one of the indicators we use on our early warning alert system to be able to trade the index ETFs. But as we see right now, yeah, we're pushing up a little higher. And typically what this is when 80% of the stocks, at least over the last year and a half, when they get up in this 80% area, the markets tend to get a little bit top heavy, and they tend to roll over a bit. Will that happen again? We don't know, because there's still some upside, especially with the NASDAQ breaking a new highs. So let's take a look at the charts. So S&P, as we highlighted earlier, S&P is now back up to its resistance at the old highs. That was the old highs. This was an all-time high just before a couple of days before the end of the year, where we hit the high and we're right back into that area now. A couple of positives that I'm seeing here, Dave, on the the index, the S&P at least, is back in here we had all this spaghetti when it came to moving averages, and so it was kind of hard to determine whether or not, it was hard to use the moving averages to take trades off of, which I like to do. However, the support was there, the resistance here. Now we've broken above this resistance. What are some of the targets? And you can just apply some good technical analysis to this. And I'll switch over here to the weekly chart. And if we break out of the top of this, you can basically take this range from here to here and add that to the breakout to give you a potential target. How large is that particular range? Well, it is about, there we go, about 5%, so 5.5%. So if we do break out, close above, you can add another 5% onto that. If you're trading the leveraged index ETFs, the 3-time leverage, that would equate to approximately a 15% move. So right now, hey, things are, as I said, appearing as if the indices or the market, which is the market, are righting themselves. And the NASDAQ. The NASDAQ is continuing to push higher. As you can see here, it did break out of this resistance line, the top. It's broken that ceiling now, so this area here now becomes support. So we can look for bounces across that, or we can push on up. As I said earlier, get that. This line up here at 48.16, that is the all-time high on the NASDAQ. See if I can get that back into the right puka. And so we're bouncing up, and we may bounce down, but as you can see, when the NASDAQ got in gear this past week, starting on Wednesday, we started moving up quickly, and it gapped yesterday, and then it also gapped today, which can be signs of strength. What are we looking at over here? A couple of areas of concern. New high here, true strength lagging. Stochastics, negative divergence. Momentum, negative divergence. We'll see where today ends. But these indicators here have got to get in gear to demonstrate that, yes, this up move will go with the price action, but the price action will be suspect until everything gets into sync. What about the NASDAQ? Or what about the Russell? Russell? When I checked the Russell earlier, Dave, we were right at resistance. Guess what? We're still there. But one of the things I really like about the Russell for potential is if we do break out above this area, make sure that I have then I can take this line here and draw that up. That's about a 5% range, which equates to about a 15% increase if you're trading the leveraged index ETFs. We'll see if we digest these gains a little bit, but it still has to get up above the 1221.40 area and close above that for us to have a valid breakout. What are we seeing? Again, as I was saying, it was stronger than the other indices, which I think is good because oftentimes the small caps do lead if we are going into a more significant move. And as you can see on the NASDAQ and the S&P, they're actually down below the 50 or bouncing around down in this area. Then the Russell bounced off its 8, didn't even get close to the 20, and now we're seeing the spaghetti that was over here unwind, and we're starting to get the slope is changing, the stack is positive, showing that we could be moving, going into a more sustained uptrend. And it would be okay, even if it was gradual. Even if it was gradual. Because over the next few weeks, would it be okay if we did jump up another, 5% or 3%? Sure, big work for me, Dave. But as you said, we've got our first step out of the blocks where we've broken out of a trading range. Now we need a couple of follow-throughs, and potentially we need the pullback so that we can take positive trades at the appropriate action points. So that's what I'm seeing with the markets, Dave. Right now, things are looking kind of positive, as you can see. Momentum turning up, TSI turning up, and once TSI gets above this zero line, that tends to denote a uptrend. So that's where we're at right now, Dave. What do you have for us?
I've got lots of goodies for you.
Okay. I'm switching over to you. And guys, now's the time to get questions in and all that kind of stuff, because I look at the questions while Dave's presenting, and so Dave, I hope it's good, and I'll try to listen today.
Okay.
There
all
we
right.
go.
So last week we talked about where's the follow through. Every time we've been stuck in this box, and every time it looks like the market's going to go, it goes back down, and every time it looks like the market's going to roll over, it goes up, and it's just this roller coaster every day. And finally, actually, it was really funny when Dennis and I were on the plane going to Orlando. I'm like, wow, what a great day to fly, because it was actually finally a quiet day in the market. We didn't have to deal with triple digits up and down all over, and it's really been a really nice market since then. And we finally have gotten some follow through. We finally have had a clear move higher. So that's really encouraging to see. It's also encouraging to see the NASDAQ clear that box area. And the question now is, will the S&P follow suit? Will the broader market follow here, or are we going to, just kind of eke into a new high here and then roll back into it with the NASDAQ? So only time will tell. But what we've been doing all this week is selling the rips. We've had this nice rip in the market, and we've locked in gains on most of our positions, or walked away at very small losses on a couple. So we locked down a lot of gains, and as you can see, here's why. I mean, the S&P is right here at resistance level, very short-term overbought, so it's a logical time to do that. What we don't want to do is go hog wild and start buying a bunch of stocks in the market that's overbought and facing resistance levels. And that is our trading plan. We don't chase stocks, and we also don't chase the market. We let the stocks and the market come to us, and we buy support and we sell resistance, and we do the opposite when we're shorting. So, and we're just simply trading what we see. So that makes it really easy. And here's the results so far from the trades we've locked down over the past week or so. $2,400 in profits total from these trades. CyberArk was a really big one for us. New IPO that formed a bottom here and then broke above the pink line here and was off to the races. And we locked it down actually yesterday prior to earnings, because it was approaching this red line, and it's gone from 35 to 45 in 5 days. So we don't want to be greedy Gus here in the market and try to hit a home run every time. We just we'll be more than happy taking our 15% plus profit here, and if it pops on earnings, okay, and if we'll look at it another opportunity. The first time it pulls back here, we'll take another look at it. But the last thing we want to do is watch our nice double-digit gains go away on a bad earnings report. So so that was a great stock for us. And so right now we're just pretty much mostly cash. We only have 3 positions, 2 long, 1 short, and we're just waiting for the market to set up the pins. Think of the market like a bowling alley where you bowl for strikes, which we just did with the trades I showed you, and now we have to wait for the machine to pick up all the pins and put them all back together again and send the ball back to us so we can knock them down again. So that's kind of what we're doing, just waiting for the ball to come back here. And there are some good setups out there that we're looking at. This is Alaska Airlines. As you can see, very nice uptrend stock that has pulled back nicely to the 50-day, and there's lateral support here in the $60 range. Short-term oversold. All the conditions we look for, we're just waiting for that break above the pink line, but we're also waiting for the market to give us a little bit of a pullback here, since we are so short-term overbought on the indexes. So there's a lot more setups on both the long side and the short side in our watch list. So if you want to see those and trade in tandem with us, go to our website, sign up for our 15-day free trial. You get a newsletter every single day except for Saturday. We talk about what's happening in the market technically as well as leading stocks. We show you the patterns. We educate you on the patterns. And when stocks trigger trades, we send you trade alerts and make it easy for you to trade in tandem with us. So it's kind of short and sweet right now, Dennis, because, like I said, we're just waiting for that ball to come back to us via the big machine called the market.
Yeah, Dave, that's that is absolutely awesome. Yeah, it is. It's basically an area of just waiting. One of the areas that I'm trying to approach this year versus last year is I'm actually trying to get us to a place where the members of active trend trading can actually start building some positions, because I would like to get into some positions that would be longer term. In other words, because we have kind of a blend of folks, and so and so that's what we have been working on this year so far. And so, like I said, I have been playing small ball because of the craziness in the market. Hopefully we'll be able to move now into a some more significant aspect. So Dave, real quick question for you. Ellen?
It is very refreshing to kind of feel like the market's back to normal again, if there is such a thing.
Yeah.
I mean, that January was just, I don't know about you guys, but it was kind of exhausting. We have a saying called "scare them out, wear them out," and it definitely felt like the market was I was getting worn out.
Yeah, no, without a doubt. I know it would, because I would sit there and I'd go through my watch list almost every evening, so okay, where's a trade, where's a trade, where's a trade, and I'm going, okay, there's nothing showing up, and I'm going, okay, right. At least nothing solid. And because what do we have there for several weeks is we would have the market gap up, sell up. We'd have the market gap down and buy up. And so, and now that's not complaining. That's just part of the game with trading in the market. It's once you have your position on, that basically is the point that you have total no control over. The only thing you control at that point is where you put your stop loss and where you put your profit target, and in designing your trade. One of the trades that we did this past week, it was in NOAA, with the potential of a pre-earnings run, and we utilized one of our advanced entry techniques. Is basically we put a conditional order here about the midsection of this big green candle, which was a bullish candle, and we got filled at about I think 2055 or so, 2060, and put our first profit target up here at $22, and we came 3 cents away from it so far today. But there's no reason, nothing is showing up on this chart to be able to sell this at this point. And then when it comes to protecting, one thing that I do at Active Trend Trading, here's another quick one. AMBA, we had gotten in for an 18% gain earlier in the year on AMBA, and we basically thought we were going to get another earnings run. This support here at 54.86 was holding, and bam, it got hit today, and we had our stop loss just below this at 53.82, and so that was
disappointing, but
it was disappointing. Yeah, it is what it is, Dave, but one of the things I'll just chat about real quick with folks is sometimes when we have our stop losses, our hard stop losses in place, we get caught up or we get hit by what they call slippage. And it just basically, it's kind of the luck of the draw. And if you have a hard stop in and the stock goes against you, it may not fill exactly at that stop loss. It depends on what orders are in the queue, and if there's a lower, a significantly lower buy order in the queue after that, you get stopped out, and it may, the slippage is the percent difference in either the profit you want to take and or the loss you're trying to protect against. That slippage is hopefully not too significant. The slippage on this one, I got out with about a 4% stop, loss, and the slippage took it on some. For some folks, the slippage took it down to about a 4.7, but still well within the 7 to 8% that some organizations follow. So that's
for us, when we see stuff like that, particularly today where it just happens so fast, we try not to react right away, because if you do, you're probably going to get filled at the low of the day.
Yeah.
And just see if it will bounce, and we did that with the AMBA, and it's not bouncing, but there's also some decent support there in the $50 range. So we told our subscribers to stop out on a break of the 50-day, so most of them probably did that. For us, we're just going to let it be and look to get out at a higher price here after all the hoopla's over with here.
Yeah, and and there's a couple of ways that folks can go to protect themselves in situations like that, such as selling covered calls. AMBA's a great one because it has weekly calls. You can sell the weekly calls on it. However, it's not going to protect 100% with those kind of strategies, but it does protect some. So active trend trading system, our model is basically we clarify, simplify, multiply. We follow the five pillars of trend trading. We in any market conditions, the active trend trading, we teach our folks what to trade. Top quality IBD growth stocks and or the indexed ETFs or the leverage index ETFs. When to enter, we have very well-defined objective entry action points, exit action points, and we define what strategy we're going to use. We're going to go long the stock, short the stock, and or we're going to do a simple option strategy, and then what to expect, and all that's defined on our website. Here's where we're sitting, Dave. This was a stop out on AMBA earlier this morning. And that's one of the things that I like to post. I let people know exactly where we're at, and I've been doing this ever since we launched this. Exactly where we get in, where we get out, and this is posted each week to our website. And so as it stands right now, NOAA is kind of offsetting right now for this week the losses that loss that hit with AMBA. And here's where we did. January, we're up about 1,200. The AMBA hit. Here's what this is reflective of February. February's not over yet. Our early warning system so far this year, the first trade was up about 4.15%. And here's how we did last year. And then one of the things we've been asked for, David, is people continue to ask me, well, do you have a trial period, something trial? And so if you're interested in a trial, you can get 30 days, a full month. And if you'll go right there to that website, there's no obligations, but it gives you total access to the text alerts, training videos, midweek training webinars, email alerts, ATTS, our website, and you can just give it a try. $4.99 for 1 month full service. And for the folks who do join us on How to Make Money Trading Stock, we continuously offer a really great membership for both active trend trading and the early warning alerts, and you can go to this website and take advantage of that. So, David, that's all I've got for today. I want to say, we'll see everybody next week. Dave, you got any closing comments, and then we'll look at some stocks. Dave?
Sorry, I was on mute.
Okay.
Yeah, I would just say to take it easy here, because we're at a point, where we're really short-term overbought and we're hitting the resistance level, and so the safer play would be to wait for if the market does continue to move higher here, wait for that initial pullback.
Yep.
And then you can load up. But here you're leaving yourself vulnerable to a pullback and having a bunch of new positions be underwater right away.
Yeah, I agree wholeheartedly. And next week, some of the other news that comes out next week, the Fed's minutes from the last Fed meeting, they come out, and that tends to bounce the market around a bit. Again, it's a shortened trading week. But as I said, we'll see you guys next week. It is nice to be back providing what we're seeing in the market. So keep growing the egg, trade wisely, trade profitably. And here's our contact information, David's contact information, and my contact information. If you have any questions and or want to take, just want to chat about some stocks or that kind of stuff. So this concludes the formal presentation. Now let's look at some stocks. There's one question here, David. What was the amount of money invested that returned the $2,400?
Oh, well, we have a portfolio of about $200,000, so we don't put any more than 5 to 7% in any one position. So it would be 5% of 200,000 would be, what's that? $10,000 per position. So about $90,000 was invested for those 9 trades.
So does that answer your question, Ellen? Cool. And let's see. Let's go over here to that stock chart. Ooh, AMBA's still not doing well. Let's see. It was a lot nicer. You love it. Well, I mean, you don't love it when they fall out of the sky, but I absolutely, when the stop loss triggers and it keeps falling, that's where I kind of thank my the good fortune to have had the stop in place. So that's but we've got support down here around 50, positive support at the 100, and so I'm not taking my eye off of this one. Here's a couple of stocks I promised I would do for a gentleman. Zillow. Well, Zillow, from a pure standpoint, it is basically kind of putting this double bottom thing going on here. However, it's not breaking back up yet. It's got earnings coming up. If you are not in this stock with a significant profit cushion, then with earnings coming up on this day, which looks to be probably February 18th after market close, I would kind of stand aside, and I mean, it may get a bounce and run up here a little bit, but I would kind of stand aside and just let it do its thing until after earnings. And if it gaps back above this midsection of this double bottom, then it may be interesting up here in the 130 area. If it holds that and continues up. That's one. David, here's a couple more that are coming in for me. Sonic, S-O-N-C, Broadcom, BRCM. Do you have that one?
Not sure.
I know you have VDSI, yes?
I do have that, yep.
Kite, K-I-T-E.
I've got that.
Alibaba, do you have SLXP?
Yes.
Okay.
So which ones do you want me to do here? VDSI?
Yeah, why don't you start with VDSI? I'll finish off here on this one from Mercado Libre. Excuse me. Again, we've got earnings coming up on the 26 in 2 weeks from now. We may get a little bit of a bounce. This one looks more interesting, Jorge, from the aspect if this 8-day moving average holds, you may get a little bit of an earnings run that would pop you up potentially up to about 140 before earnings. Typically, if we go from here up, oftentimes you will get a 5 to 10% earnings pop, and that would take you back into this resistance zone over here. That's prior to. That's assuming that you do not have already have a cushion in this. This is a pretty nice looking pattern, actually, Dave. And trade's a little bit light from what I like, but because it's less than 500,000 shares. But I think it does. I don't know what kind of score it has on IBD, but it looks pretty. Pattern-wise, it looks interesting. And if this continues here, this is very positive. So, David, I'm switching the screen to, well, hold on a second, David. I'm switching the screen back for you. You've got it.
Okay, Kite's a little bit of a wild child. He definitely has a big trading range every day. As you can see, it popped up here from 60 to 68 in 2 days, and then right back down, and it's sitting there at the trend line. So very short-term oversold. So all the conditions remain ripe here. We actually stopped out at pretty close to break even on it yesterday, just because we don't like seeing stuff go to 68 and come right back down to the low 60s within a day. So we wanted to protect our profit, particularly with the market being so short-term stretch right now. So that could be coming back on our radar soon, but for now, that's where it's at. And then VDSI is gapping up above the 50-day, although it's pulling back quite a bit near the low of the day now. The question here now that it's back above the 50-day, let's see if it can stay there and pull back, and let's see what happens when it hits the 50-day, because it's been around below the 50-day for a little bit. So let's see if it can stay above it and pull back to it, and if it does that and hits the 50-day and then bounces off that, then this might be a really nice trade. But for now, not much to do with it.
Yep. And did you have SLXP?
I can pull that up.
Okay. Yeah, VDSI is one that I'm keeping my eye on. Didn't want to take any position in it this week simply because it did have earnings, but now that we have earnings out of the way, we'll see if we shape up with a potential entry point.
Okay, so VDS or SOXP. I mean, this one's been on a tear ever since coming back above the 50-day, and just hasn't given anybody an entry point yet. I mean, every day it's. I mean, this is a little pullbacks are a little too short for us. So, same thing. This is very well extended, very well overbought. So, just have to kind of be patient and wait for this one to set up. It will at some point, but nowhere near any support right now for us.
Yep. And so, okay. Do you, okay, well, I'll tell you what, you can prep, do you have CEMPRA or ALDR?
I have neither.
You have neither, okay.
I can pull them up if you want.
Have you been, guys, been keeping track of Alibaba?
Yep.
Okay, why don't you pull up Alibaba, and then I'll swap back over to take a look at some of these other ones.
Okay.
Yeah, I know. I'm liking Alibaba because it appears to be basing, and yeah, I don't know if it's ready to buy yet, but it is definitely showing some positive signs. It has almost retreated back to its IPO where it did that big plunge after its IPO. But I'll let you go ahead and chat about it, Dave.
Yeah, it's just been in a downtrend here, and it's trying to find support here, like you said, right at the original low right after the IPO. So as long as that holds, everything's fine, and very well short-term oversold here. So let's see it rally up to the 50-day and see what happens when we get to that level. But good stock, good fundamentals, and holding support level.
Yeah. And so, yeah, I'll be looking at it, Dave. If this low holds and it does put in some, because it's almost a really pretty nice trading range in the little horizontal range that it's in right now. Because I think it's, what is it from? I'm looking at your chart and I can't totally see it, but is it from 65 to 90 or 65 to 80?
What are you asking about?
I'm asking, are the recent lows down at about 65? I'm looking at
like around 85.
About 85, and the high is up just slightly above 90?
120 is the old high.
No. The one in
the channel.
Yeah, the channel. It gapped down.
Yes.
Okay. And so, I mean, that's a tradable range, but you certainly don't want to take a trade right in the middle. Yeah, my trading research partner, Mike Traeger, he likes these little channels like this when you get a 5 to 6 to 7 to 10% channel, and he'll wait for it to get to the bottom, buy it, sell it when it gets to the top or close to the top. He'll try to get about 80% of the move, and that's worked for him very well. Especially, sometimes you get stuck into a trading range that stays in place for weeks and or months, and so it can be interesting. Here we got Visa. Can you see my screen, Dave?
Yep.
You can? There we go. Here I have Visa. What's Visa doing? Visa just had earnings back here at the end of January. It has bounced up. It actually broke out, and it looks as if Visa is doing a little bit like some of the other things, other entities that have been breaking out lately. It broke out, but then retested, came back to the 8-day, bounced back up. I think, isn't Visa also going to have a split here coming up? Yeah, 4 for 1. Okay, that's a really large split. So at the same time that I say that, oftentimes the stock will go on a pre-split run. But at this point, this candle that we're seeing today on Visa is a negative candle. It could turn out to be a dark cloud cover, which is a bearish reversal candle. And what are we seeing on the weekly chart? We are seeing that while Visa has popped to a new high, the true strength indicator has not. Neither has the stochastics, and the momentum under the run over this last 3 days, including the earnings run, has been under a low momentum umbrella. So right now we're looking at potentially for the week having a spinning top at a level of resistance, and so we'll see what happens with that. One of the other ones folks wanted to know about was BABA. Oh, you just did BABA, didn't you?
Yep.
Never mind. BRCM. Did you do Broadcom?
No, I don't have that one.
Okay.
But I can work on it if you want.
Yep.
If you want me to.
It's Broadcom is up, and what are we looking at here? Basically, it is. I mean, it's a good, nice volume every day. It has come down. It had found support at the 40, and is back up to 46. So that's about a little bit over 12% run, 13+% run, and it looks like it's at least in this recent history is breaking out to a new high. As David was pointing out, this is a perfect example, I think, of something. Okay, it has extended. It is outside. It's almost pushing 10% above the 20-day moving average. So it would not be unusual for this to pull back now and pop up. It may stay, it may respect the 8-day, but this particular candle today is showing that it's reached its point of where it would like to digest some of these gains, and before it decides to move on. ALDR. Yeah, I don't know. I'd have to do the market check or the stock checkup on this on IBD to see if it passed the. This is looking like it's really setting up well to break to the downside, to be really honest with you, because you've got this little, what is now a bear flag. It has already broken this swing low, and so if it breaks below this level here, it may come back down to, from 25 to 24, breaks that. We're looking at potentially 22 to 20, which is down here at in this case is the 100-day moving average. And so it's looking a lot weaker than it is strong. Longer term support is over here at this level right here, 22. So, yep, that's a bearish setup. And so let's see, Dave. Let's see. You covered. So here we go. You covered V. Sonic. Do you have Sonic? SONC?
No, but I'll pull it up right now.
Okay, why don't you pull it up, and I will cover CMP. There. While you, whoops. So is anybody investing in any of the medical marijuana companies? At the money show they had, were you surprised at how many booths were there representing medical marijuana companies, Dave?
No, I think it's a good idea, a good marketing idea at least, and I just haven't seen anything really substantial in any of these stocks yet. I went to the medical marijuana panel at the San Francisco Money Show. Yeah, it was interesting. But
did the guys sound like Cheech and Chong? Just kidding. Hey, man.
Yeah. So anyway, it's again, it's just okay. Show me a stock that's got something I can work with in that area.
Yeah, yeah. And so anyway, Sempra, it's actually got good average volume, but it's just been basically driving sideways here. It's actually got also pretty good range in that this black line here is, this envelope is a 10% moving average envelope around the 20-day moving average. It's got earnings coming up what looks to be at the end of February. Not a lot, and as you can see over here, it's had one heck of a move from 10 up to 24, so it's up over 100%, and it's put in this basing pattern here, determining whether it wants to, and you'll see this appear over here on the right side, left side, and it's got this little trading range that it's operating in. And so it's either going to break out above that and then run. And this trading range is approximately 13%. And so if it closes above this on a regular breakout, you expect 13% more. If it pulls back into here prior to earnings, the closer it gets to earnings, the less attractive the stock may be. But right now, it's just consolidating. After one heck of a move, because this move here towards the end of last year, that's 93%, guys, from 14 after this breakout. So interesting stock. I'll have to do a stock checkup on it to see what kind of composite it has. So Dave, you ready for the other stock?
Sonic? Yeah.
Yeah. I love Sonic hamburgers, though.
I do too, and I like their shakes.
Oh, you like their shakes? Okay.
I do. I'm definitely a milkshake fan. All right. So now we just got to get one of the, what's that called? The shake and
bake,
whatever.
Shake
Stack or whatever it's called that went public. Yeah, we need to get one of those out here. 'Cause I heard they have phenomenal shakes.
Yeah.
But I guess we'll have to wait. All right, so Sonic, just really nice, easy chart here, a nice uptrend. Had a sideways consolidation into 50-day. I love those types of consolidations. I'm assuming this gap up is on earnings, and then it's doing it again. So
Yeah.
just a little bit, either pull back here towards the 50-day or more sideways action and let the 50-day run into it, and you could take it on that first pop up. But good looking chart.
Yeah, back a long time ago when I was stationed down in Kingsville, Texas, my wife worked in Alice, Texas. Some of you may actually know where Alice, Texas is, but they had a Sonic there, and the Shake Shack in Vegas. When you go, yeah, is that the Shake Shack, David? But yeah, but we used to stop at Sonic because it was so cool to have them come out and put the old tray. Just like the good old days. So cool. Okay, folks. George, is that pay or is that payc? P-A-Y-C. Okay, we'll take a look at that. And so yeah, I like Sonic. It's some of these, and I will throw on, Dave, to Sonic. Some of these burger joints are becoming people are getting interested in these, and this is one where that I've got on my watch list is Habit, and it is consolidating. It is not ready to buy, but if it gets back down below 30 or even down to 29.13 and then comes back up through 30 or comes back up through 29.50, this has got pretty good fundamentals on the IBD stock checkup, and this is one it has been a kind of a regional type burger joint. They make a great hamburger, great fries, and they're quick and fast, and so I'm watching this one. This was on my radar. I'm not buying it yet, but it does look interesting. Talked to one of their managers in our local restaurant, and he said that they are expanding and moving into Florida, and so it could be an interesting. I'm not going to say it's going to be another Chipotle grill because I don't think it will, but it may have some nice juice in it. Pay Verifone. Yeah, nice looking pattern here, Jorge. It's got pretty great volume. The momentum just went positive. It would have been a great buy down here at 31. We're starting to get back up into a congestion area at the 35 to 36. So basically from there on up is all resistance. And so it may continue to just pile up. What's interesting, though, is that while it has been just moving up rapidly, we've got earnings coming up on March 10th. So it may be a pre-earnings run back into this resistance area. This move here does not have a real huge increase on volume. So this is positive, this is positive, this would be a negative. So plus, negative on the move. Price action wise, though, is a big plus. Have I eaten it at Chipotle? Yes, Dorothy, I have. So do you have ABBV, Dave?
No.
Okay. And then I'll put what I will put up here is I'm going to add a C to this, which is Paycom. And as we can see with Paycom, they had a huge breakout on earnings. So it has a legitimate breakout now, and now it's consolidating and digesting these gains. Watch the breakout level, because typically on every breakout, a stock will pull back. Not necessarily all the way back to the breakout level, but if it consolidates there and doesn't fail, and this 8-day and or the 20-day catches up with it, if this moves sideways, that would be your signal to say, hey, I'm I'm in this trade. But Paycom, this has no options, and its average per day is about 408,000 shares, but it does have a really good stock checkup in ABBV. Looks like it's setting up for a short, but it may also be setting up to make a run back up into the moving averages on the weekly indicators. It looks like it has reached a significant oversold area where a bounce up would not be surprising. So we've got support at 55. The scale on this particular stock does not attract me, but it does trade a lot of shares per day. What does AbbVie do? Do you know, Dave?
I don't know.
I don't know either. So, okay, folks, that kind of
help we are.
And so, okay, that kind of covers us for today. Thanks for bringing your stocks. I hope we hit every one that you were looking at. And thanks for joining us. Dave, thanks a lot. The recording of today's session will be up probably within the next half hour or so. So have a great weekend, everybody. We'll talk to you later. Thanks, Dave.
All right, thanks a lot.
Dave, hold on just a sec, okay? My new computer makes really weird noises as people are leaving the room. Dave, you're gone.